Before we get to the charts, we've got a uranium video. We're going to do a weekly uranium series with Jungle Funk Joey and Red Devil from the Chart Guys community. It's on our YouTube page, uploaded earlier today. Check that out. I also did a Twitter Spaces call, if you go on our Twitter page and scroll down a bit, where I talked about patterns, equilibrium, head and shoulders, wedges. Check them out. Hey traders, checking into the markets today. It was an extremely wild day out there. Cryptocurrency is important to be paying attention to, in my opinion, even if you don't care at all about it, because it's impacting the stock market, in my opinion. And we can see today, Bitcoin tested the low of the year, 17.5 thousand. We look over on the right here and it's an absolute bloodbath. So what's going on? Why would it impact the broader market? So long story short, and by all means do your own research because I am glossing this over and summarizing, one of the largest exchanges, FTX, the big boy in the space where the most people are trading, and there's Binance. These are the two exchanges that are gunning it out for the top spot as far as crypto exchanges in the world. So we had FTX come out, and on their balance sheet, they showed that another company had a significant amount of exposure to the coin. FTT is the coin that trades for FTX. And so seeing this, Binance holds $500 million of FTX's coin. And they see that exposure and they say, uh-oh, we've learned our lesson in the past. That's a whole lot of risk. And if this other company were forced to liquidate, that's going to decimate our position. So they announced, and it was a little bit of a Twitter feud because the CEOs were saying, you're behind our back. You're trying to get laws and regulations passed against players in the industry, so we're going to sell our $500 million coins. And they told the market. And so what does the market do? This is that coin. And in one daily candle, that coin is down 89%. So we are seeing a massive bear attack. Maybe some of this action is the selling of Binance selling this coin as well. And then you have everybody racing to get their money off of FTX. And they've had something like $6 or $7 billion withdrawn in the last few days. So it's essentially a run on the bank, a run on the exchange where everybody is bailing. So instantly, in a few days, you now have one of the major exchanges almost insolvent and struggling. And so the Binance exchange comes in and says, we'll buy you and we'll save you here. And, essentially they helped force this happening, and now they're coming in to pick up the pieces. So all that said, we had a scenario where this was the crypto space bouncing to the news that Binance will save, FTX and come in and buy it and help solve any of the issues. And everything bounced massively. There was a short squeeze. Bitcoin short squeeze from 19.2 to 20.6. That's a 6% or so bounce. And then we rolled over. And once we rolled over and things started to get ugly and FTT dropped at that point, in 3 hours, this coin, which is part of this exchange, dropped 87% in 3 hours. And as that was happening, the broader stock market went from very strong to high bear volume out of nowhere. And again, a 2.5% drop in 90 minutes. So in my opinion, the only way you're dropping 2.5% in 90 minutes on no news is the market reacting. So why would it react to crypto? You could have contagion. You could have other companies that have exposure. If I've got exposure to FTX, maybe I have to liquidate other positions to be able to cover that exposure. So in my opinion, it's absolutely related. That's speculation, but coming from someone that watches crypto and the broader stock market tick for tick every single day of the year, that's my opinion. So something to be paying attention to, and just more Twitter drama to be following, which is not fun, but we got to do it to play the game and stay on top of things. We then had a massive bounce off of these lows. Very significant, huge bounce retracement. When I say the market is illiquid, yes, there's high volume pushing these moves around, but QQQ dropped 2.5% and then bounced almost 2%. SPY, very similar. Just clearing out the order books in both directions and now shaping up a bigger picture equilibrium. So I went from a very nice trading day. I shorted Meta well after yesterday. I had some nice experience and it was fresh in my mind. Shorted Meta well. I shorted Coin well on the spikes. Did not hold it long enough for its almost 20% drop there. But I had a solid day and I gave back my gains. And I don't really regret it, to be honest. So how did I get back my gains? I gave back my gains scouting a lower high to be the result of this bounce. And I started, I went bearish on this 5-minute bear flag, recognizing, okay, this is likely crypto related. Things could get ugly. I've got to protect IRA positions. So I entered a large position here short, and I exited maybe 25% down near the low. And so I'm sitting pretty on the day. And then as this bounce started taking place, I started to scale back in the short. So I reload what I sold, and then I start flipping and just trying to keep my head above water, flipping here. So how do I flip? On the bull spikes, I enter SQQQ, and then I sell half at 1 minute EMA. And then we get a new high, and we go right back to EMA 12 on the 1 minute. And so I was in a red position, but I was navigating it to where I wasn't getting to, a big loss. And eventually I just stopped out and said, all right, well, there goes my bearish attempt, because the bulls bounced way more significantly than I thought they would. So I don't regret looking for the lower high, and I gave back my day trading profits on the day, and I ended up red, maybe a half a day loser on the day on that bounce, trying to short that bounce. So not an ideal way to end the day, but considering all the massive volatility in both crypto and stocks, I'm A-okay with that. Didn't lose much or anything in crypto, and in stocks, traded well for the most part, just that one end of the day trade. And I tried to enter a decent position looking for the daily consolidation. Remember, we're looking for daily lower highs here. QQQ has a lot of space for it to form. And now we're watching for, can the bears confirm an hourly downtrend with a lower high and lower low? So the trade that I was going for was scaling into a decent short position, looking for the hourly lower high to try and set up that downtrend. And the bulls were able to just carry that bounce through the entirety of the day, or I should say the rest of the day. If this move happened and this bounce was at 1 p.m., I would have been profitable on the day. I would have been able to manage this. I would have gotten the pullback that I was looking for. But it's because it's the end of the day. As a day trader, when your clock is ticking and you're running out of time into the end of the day, it can obviously impact trades and the decision. So we got to about 3:15 and I said, uh-oh, bulls can keep the majority of this bounce by the time we close. We're running out of time to see this equilibrium that we're anticipating. We're running out of time for that to play out. So in the end, so much volatility and a decent amount of trading for an extremely uneventful day in my account. That's the way it goes sometimes. So where do we stand? We stand with watching crypto. Again, just being aware of this situation. And then you have traders like me. I went a more aggressive short today in the S&P 500, or I should say the NASDAQ, than I have in a long time because of the backdrop of the cryptocurrency. So whether it's a self-fulfilling prophecy or whether there's actual contagion risk, again, it's all speculation, but definitely related in my opinion. So 15-minute tightening range is on watch. The S&P 500 here has to confirm an hourly downtrend. We lost the hourly uptrend today. Have to confirm the hourly downtrend, breaking the low of today tomorrow for the daily lower high to be set. As I mentioned in the video yesterday, I'm watching for that to form. I'm watching for that daily lower high. And so that's another reason I was going aggressive as a bear. For me, it was, okay, this is it. This is the daily lower high shaping up. And then by the end of the day, it was, not so sure. Could very easily still be, but I don't have the confidence after the size of that bounce that I had an hour ago. So I do have a little bit of bear exposure. Overnight, I'm fairly flat, offsetting my IRA long positions and just waiting for the dust to settle a little bit here. So NASDAQ and the S&P 500 both scouting daily lower highs, but bears still have some proving to do to confirm an hourly downtrend. The dollar is doing exactly, and this is why today was so wild, the dollar broke support to the lowest level we've seen in over a month. We had a monthly inside bar bear break for the first clear monthly consolidation pretty much all year. And so on that backdrop, gold and silver are breaking out. Commodities were showing some strength. We had the broader market showing strength. And we had crypto bulls early in the morning holding on just fine. So things shifted drastically from a lot of bull sentiment because of dollar weakness into that unraveling of things that we saw at the end of the day, towards the end of the day. But it's a win for the dollar bears and commodity and crypto and stock bulls as far as dollar weakness. Certainly doesn't help crypto bulls right now, but a lower low. Is this going to be a falling wedge? Maybe. If we see a daily bounce from here, we're certainly going to be scouting a falling wedge to potentially be the result of this bounce. Anything under 113.15 is just a daily lower high next bounce. Next support level, I'm looking at 109.35, which held. That's this level right here. And then if that were to break, 107.68. So bears want to continue to keep control with lower highs and lower lows. And I'll be watching monthly EMA 12 as a potential target if bears are able to follow through. We still got the election results tonight. We still got CPI on Thursday. That's going to have a major impact on the dollar and on everything. So, paying attention. Semiconductors, higher high. Lead bull continues. Hourly bounce, anything under the high of the day is an hourly lower high. Can bears confirm the hourly downtrend to start daily consolidation? If we see daily consolidation, we're in a much different standpoint than QQQ. We got a whole bunch of space for a daily high or low. QQQ does not. QQQ would fairly quickly be testing the recent low if daily consolidation shapes up from here. So semiconductor bulls keeping their strength. INTC swing position, broke 28.83 resistance, but no follow through. So being a little bit cautious, because if this shapes up as a daily rising wedge, it's going to shape up as our weekly lower high with EMA 12 resistance right there. NVDA also pulled back fairly notably, but decent little bounce into the end of the day, held the low of the day. No, we did break the low of the day. Failed the high of the day and broke the low of the day. So keeping an eye out for daily consolidation. I mean, we're keeping an eye out for daily consolidation everywhere. The difference is where individual names and sectors are positioned on their daily chart. XLV, got to be cautious of these double tops. XLV failed resistance. If we start daily consolidation from here, these are the only two levels that I care about until we get a clear break one way or the other. Anything above 128.70 will be a daily high or low, but have to break the low of today, tomorrow for a convincing double top rejection at resistance. And XLF is the same. It's not as convincing a rejection on XLF, but it is a double top. Bulls need to break it to keep that daily uptrend going. These are our stronger sectors. IWM broke the low of yesterday. It's one of our weaker sectors. Bears still need to confirm the hourly downtrend as a result of this bounce. But we know IWM, daily lower high is more likely on IWM and QQQ than it is on XLF and XLV. Biotech sector, nice strong start to the morning. Hourly equilibrium from yesterday got real tight. We held that support first thing and broke resistances, but the broader market dragged us back down, erasing that move. And here is XBI still sitting within the middle of its range, continuing to tighten up. And same thing here, anything under 85.08 is a daily lower high. There's a lot of space for that daily lower high to form. Metals had a great day. Silver continuing its breakout, and now silver has seen the highest level in 3 or 4 months. So again, the silver bulls and the junior bull miners were positioned the best out of the metal crew if we were to see dollar weakness, and they are showing us that as GDXJ also breaking out to the highest level that we've seen in a couple months. Lots of space for a daily higher low to be the result of next consolidation if you're feeling FOMO in silver and gold and miners. I personally would just be waiting for next daily consolidation to be scouting an entry, fully aware that we could see daily consolidation begin depending on what CPI reaction is on Thursday. Oil, weekly resistance break straight into daily consolidation is not a good sign for the bulls. Still a daily uptrend, but if we lose daily uptrend support at 87.60, the higher lows are lost, and that would be a bit of a red flag to confirm the weekly trend change straight into consolidation, keeping in mind we are scouting a monthly lower high to be the result of this bounce. Still a daily uptrend, but today is okay, we need to be paying attention. We need to put our bear glasses on because if we lose this daily uptrend, bulls are a lot less comfortable. Natural gas, significant 12-hour consolidation. We pulled back a solid 15% from the recent high. Hourly oversold conditions. Bulls must confirm an hourly uptrend to try and set a 12-hour high or low. And aggressive bears are going to be hoping for a 12-hour lower high to be the result of this bounce due to the size of the pullback. We are testing weekly EMA 12 and rejecting from it initially. So keeping an eye on that as well. I did enter some Amazon long swing today, just playing off this bottom, this base. And I'll stop out if 88 breaks. Just threw it in my IRA. I don't have any individual names with any tech or consumer discretionary exposure in my IRA. So my mindset was dollar weakness, broader market strong. All big tech names are starting daily oversold bounces. Amazon has not. So I was looking for Amazon to be a laggard on the bounce. It still may be, but obviously that broader market pullback definitely shifts probabilities a good bit. But my risk on this trade, again, being a swing position, less than a day loser if I stop out. So no biggie. Just trying to position in some longer term holdings for when the dust settles and when the bulls do take back over. Maybe that's now. And if we drop to lower lows, then it won't be now, and maybe it will be in a few months. But what I do know is I do not want to have, my IRA has been 90% plus cash for a very long time. I deployed capital for the COVID dump, and obviously that is a large part of red on the year because it's a no-touch position. But what I do know is that when this bear market comes to an end, I want to have zero cash in my IRA because bear markets are when long-term investing with decade-long mindset should be taking place. All right, that's all I got to say. Whole lot of work for nothing for me. Hopefully you fared well. Just a reminder for stop losses on everything. Crypto bulls need stop losses in a big way to protect against days like today. I stopped out of Bitcoin at 20,000. That saved me a lot of red. Stop out up here, break even or so, tiny loss. So now it's just a question. I think the dust has settled. I think it was a knee-jerk reaction. I don't think this crypto situation is going to be significant for the broader market. I think it mattered today, but I think as we get more information and as that spike in fear starts to subside a little bit, I don't think it's going to be market-wide. But again, it's something we just got to keep an eye on. There's many things we got to keep an eye on, and this is now just another one of them. So question remains into tomorrow. Well, number one, what's the election results? How does the market react? And number two, are daily lower highs shaping up? 2 hours ago, my answer was 93% sure yes. Now, my answer is 68% yes, due to the size of the bounce. We'll see. Do good things. Appreciate you watching. I don't have any end of the day video content. I'll throw something old in here. Emotional control and important characteristics for a trader to have. Hey, calm, cool, and collected. Fuck. I will link the link. Most important trait for a I'll put that in the comments of this video as well. Fuck. Not waiting for the best high risk, high reward. Fuck.